Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. What's going on, guys? It is Friday, May 16th, and that means it's time for the Friday Five. Before we get into that, however, if you are enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. All right, friends, back with another Friday Five here. This week, the main theme was very clear. It is crypto excitement on Wall Street. We have Coinbase joining the S&P 500, Galaxy uplisting to the NASDAQ, an eToro IPO that actually popped. Scott Melker and I get all the way into it, so without any further ado, let's dive in.
We got super rugged by StreamYard before, even just now when I tried to play the theme music, it just sat there and did nothing. So clearly we are living in the glitch. I'm used to living in the glitch on Twitter Spaces like every single time, but not usually on YouTube.
Yeah, we actually have had a shockingly few technical issues with this, so we were due.
We were definitely due. I had to somehow myself attempt to set up a stream here, which is interesting. The YouTube link now has no description or anything. But hey, let's do a show. The first thing on the menu before we dive into all of the things Bitcoin related is tariffs and inflation. We're going to knock it out and get it out of the way. Obviously, we had a CPI report for April that came in lower than expectations, meaning that those who are expecting tariffs to have an immediate effect on inflation has not happened. Trump says Fed must lower rates after soft inflation report. So once again, going back to bullying Chairman Powell to try to get this done. And of course, we just had U.S. consumer prices rose less than expected in April. A lot of commentary on why this happened, but I'd love for you to break it down.
Yeah, I mean, look, I think that there are a couple things that are going on here. One, maybe the relevant context for this is markets are watching this really closely because part of, the next set of macro factors outside of tariffs are going to be rate policy, and Powell can't really do anything living under the gun of potential increased inflation. So the Fed is watching both inflation and potentially softening labor markets really, really closely. And, as markets and the administration want Powell to cut, there are a set of things that have to happen for him to consider that. One of them being not seeing a bump in inflation. Now, one print that is sort of, light like this does not mean that Powell is going to jump out of his seat to go cut rates, but it's certainly positive, especially, people were wondering if we were already going to see some of these tariff changes show up in this. My sense is that it's probably a little bit too soon to see those changes really show up. So it's kind of, the next couple of months are going to be more significant when it comes to the Fed's analysis. But, especially as, like we discussed last week, markets are looking for reasons to be enthusiastic again. They're looking for reasons to be less concerned about all of these big changes. And this is an inflation print that fits firmly in the, okay, maybe this isn't so bad. Maybe we were overreacting set of factors. And that's a positive thing, at least from a market perspective.
Yeah. Anna Wong, who we reference from Bloomberg all the time on this show because Mike McGlone works with her, said the Fed likely won't take much signal from April CPI report, as we think their internal forecasts point to higher inflation in months ahead. We maintain our baseline that the Fed will cut rates only once this year by 25 basis points at the December meeting. So a lot of people still not buying it. She said that the inflation impacts won't be felt for quite a while. And if you actually dig into the numbers, electronics were up the highest they've ever been, and things directly impacted by 130+% tariffs or 120% plus tariffs in China were impacted, and it's going to take a little while. So I guess we'll see what happens. But I think the most important point for the purpose of this show is what you said, is that markets just want an excuse to go up.
Yep. I mean, look, this only had a chance to be bad. It couldn't really be, anything other than baseline and or really bad. And so, markets are just glad that it wasn't bad.
Yeah, that makes perfect sense. The second story of the week obviously has to be Coinbase mania. Coinbase stock soars 24% as inclusion in S&P 500 signals dramatic turnaround for crypto industry. This was huge. It should be noted that they weren't just included. They weren't coming in at 500. They're in the top 150 companies in the S&P 500. And obviously we saw the stock soar massively. Now we have this situation where even the biggest haters of crypto and Bitcoin definitely have exposure to crypto and Bitcoin now, because everybody is indexed to the S&P 500 and has some exposure there. Really interesting. Brian, Armstrong, obviously, having his celebration here. He says it right there. Crypto's about to be in everyone's 401k. But then we have to talk about of course, because it's crypto side of what happened. Coinbase gets public. It's all hype. Their stock goes up massively. And then they have an admitted data breach, tried to get ransom for $20 million and have admitted that we're all getting fished by weird texts because one of their employees basically got bribed to give away our information. Good times at Coinbase.
Yeah. I mean, it's a really unfortunate timing. The reality is that this is just part and parcel of existing and operating in the world now.
Not just crypto.
Yeah, exactly. I think the market's reaction to it is fairly muted for that reason. It makes for a good companion headline for outlets that are looking for a positive story followed by a negative story. But ultimately, the bigger deal, obviously, when the history books are written, is Coinbase entering the S&P 500. As you pointed out, even the haters having exposure now in a way that they don't get to opt out of. And more than anything, just the sort of relentless march of legitimization of the industry that this represents.
Yeah, so this is obviously a huge story. I don't think anyone saw it come without any anticipation or any major pump in the stock ahead of it. So I thought that was really interesting. Just for quick to wrap up the Coinbase side of this, they think that it could cost about 180 to 400 million to deal with that data breach. I think last month, someone reported there was about 40 million lost to these phishing attacks on Coinbase alone. So obviously a problem, but I definitely applaud them for looking to solve it. But alongside this news, we kind of have this IPO mania, right? We have Galaxy Digital going live today. Of course, this article reports 295 million Q1 loss before a NASDAQ US listing, but that is happening today. Great to see that for Novogratz. But perhaps the biggest story is the success, which we've talked about a few times, of the eToro IPO, right? Okay, they started at about $45, ended up raising at $52, closed the first day of trading at $67. This is the first time in a very long time that I've seen an IPO at all, much less one in crypto, do so well coming into it and then into the first days. We can get into this other story later, but obviously they're a crypto business, but it's not the bulk of their business anymore.
Yeah, I mean, listen, the IPO window has been closed for an enormously long time. And I think that this was very surprising to people to see, as you pointed out, an upsizing of the initial price, an over, more demand than they could handle, and a pop on the first day. Like, we just haven't had IPOs like that in any area for a very long time. For me, as obviously a single data point is not a trend, but you have to think that a lot of companies who were maybe holding back from their IPOs are now saying, man, is this the window? Do we get in now? And so I will be really interested to see, not just in crypto, but in general, there are a slew of companies that have been hanging back, so will we see kind of a rush in? I'm not sure, but it's very positive because as much as eToro can say that it's other things, like, I think it is broadly associated with crypto. I don't think anyone's getting into this thinking, oh yeah, and they also do crypto. It's Super Bowl ads, we're crypto. It's crypto through and through. So
yeah, I mean, it's an honorable mention has to be Robinhood's acquisition of WonderFi this week in Canada. And big news, obviously, that Robinhood's going to Canada, but the bigger news that they decided to go crypto first. It's kind of a signal of the same thing.
Yeah. One more. Boy, WonderFi. The stories I have with.
Oh, well, yeah, from the FTX days and Mr. Wonderful. I can't even imagine. One day we'll, have some drinks on a Friday morning and we'll share them all here. A couple tequila shots and get you loosened up and see what you got.
Yeah. I will say publicly for the record, I had nothing to do with that particular deal.
Of course.
Yeah.
Anyways, so yeah, but Mr. Wonderful seriously cashing in once again. Anyways,
good for him. He's much nicer than I thought.
Yeah, he's a pretty nice guy. I've met him quite a few times. Anyways, the next story has to be Bitcoin treasury companies, obviously. So we got David Bailey of Bitcoin Magazine and Bitcoin native holding company Nakamoto announced merger with Kindly MD to establish Bitcoin treasury company. I think they raised about 700 million, if I'm not mistaken, but it was supposed to be 2 or 3. So once again, this was sort of a story of oversubscribed. As we cook through these, Tether buys 459 million Bitcoin in Bitcoin, should say, for 21 Capital. This, of course, the company formed by SoftBank, Cantor Fitzgerald, Tether. We've talked about it, led by Jack Mallers. So we're seeing them actually make a big public buy. Metaplanet now has more Bitcoin than El Salvador. So listen, we know that MicroStrategy or strategy has continued buying by the billions. Saylor isn't stopping, but the clones doing it slightly differently are popping up everywhere. I have my concerns about this, to be honest, if it continues. But right now, nice to see these companies buying Bitcoin.
Yeah, I mean, listen, this is the week that this trend tipped over into an area where some people are worried about it being this cycle's bubble, right? And or just have concerns around what it actually means. I think what's interesting to watch is the non-Bitcoiners are always going to have their critiques and whatever. Who cares about sort of Peter Schiff's analysis about things like this? But you're seeing more diversity of opinion within the Bitcoin community as well. Marty Bent, who obviously, from content creation and Bitcoin investment fame, had an interesting tweet where he basically said, look, this is cool, but what's even cooler is actual operating companies building real things using Bitcoin as a treasury asset to build things rather than it just being a Bitcoin only game. Listen, I think it's healthy to have an emergent conversation because for a very long time, obviously, no one is going to be critical of Saylor or MicroStrategy. They're keeping us afloat for a good portion of time there. But look, markets right now seem to really like this. They're willing to pay, double what Bitcoin costs to get in on these companies, and so we'll just see how that shakes out.
Yeah, I just don't want to see 10, 20, 30, 40, 50 of them, right? I'm here for every single company in the world adding some Bitcoin to their balance sheet, but effectively becoming a hedge fund to manage a treasury of Bitcoin and find creative ways to buy it concerns me because as much as we don't think there could ever be a Bitcoin drawdown again in this new era of the super cycle and euphoria, well, if Bitcoin goes down 50, 60%, these people are going to be aggressively tested as to their willingness to sell. I'm not saying it will cause the bubble. I'm saying that if we have a 40% retracement, it turns into a 60% retracement when they all sell off.
Yeah, absolutely. It creates structural risk that Bitcoin did not have before, that even its incredibly dedicated hodler base cannot beat, because we're not dealing with like individual people deciding whether or not to sell Bitcoin. We're dealing with forced sellers, and that's a very different dynamic that we've witnessed over and over again. Look, I will say this right now. There is no way, if these companies continue to build, that some version of that doesn't happen at some point. It's impossiable for it not to.
These are actively managed. Humans fuck up. It is what it is.
Yeah. So, there are lots and lots of different ways it plays out. How severe it is has to do a lot with management and the way that things are structured. And there's plenty of ways to de-risk those things. These are all smart, thoughtful people who are not immune to these sort of things. So I think that there's still plenty of room for optimism and excitement. I think the fact that the market wants this is validating. So it's a good thing now. It just creates new risk, but new things create new risk.
Good. I mean, these are three groups that I'm perfectly happy are doing this and I think are responsible and understand it. Like I said, it's the 10th, 11th, or 12th one that jumps in at the dead top and goes all in and gets wrecked. But hey, we'll see what happens. Our next story here, SEC's crypto broker rule likely to get overhaul. Atkins says, I guess we can just wrap this all one up in Paul Atkins in general. He gave the keynote address at the Crypto Task Force Roundtable on Tokenization. Clearly a massive Bitcoin bull, crypto bull who gets it, wants this industry to thrive in the United States. And of course, US SEC considers conditional exemption for tokenized securities. It's kind of a reignition of Hester Peirce's safe harbor. SEC is pretty favorable to crypto right now, a little different than in the past.
Yeah, I mean, look, I think all of us who were so excited about MIT lectures are still a little bit, shell shocked and not willing to be as excited about this one particular thing as perhaps we have in the past. But all signals are positive, and I think that to me, one of the big unlocked has always been this sort of the safe harbor idea, whatever version of it becomes real, where crypto, instead of debating why crypto isn't equity like, it is allowed to explore its equity like properties that are equity like but not equity exactly, in a place where you're not going to get destroyed either from a mismanagement perspective or from a regulatory perspective. I think that a lot of the exciting and interesting things that crypto could do live in those realms of sort of like what was previously just an unregistered security. And so I would be very enthusiastic about there being a place where people can experiment and explore things. I think a lot of really interesting things come out of that. I think that more than anything we've seen so far would ignite a new bull run, whatever, just like actual cycle of innovation and enthusiasm and potential new participants. We've sort of scraped against all the things that aren't security-ish that we can do, you know?
And we've had obviously a lot of positive rhetoric from the administration and from the regulators about bringing crypto home and the United States becoming the crypto capital of the world. These are the actual steps that prove they mean it.
Yep.
Right. So we need to see these things happen, in my mind.
Yep. I also think that the faster we can get safe harbor type rules in place that allow people to get in and go through a full cycle of being in a safe harbor and whatever sort of registration they have at the other end of it, the harder it gets for an unfavorable administration to just shift it out, right? If there is a new structure that's built that is proven to, allow for these sort of opportunities without wrecking retail, it creates a lot more inertia for someone to have to sort of unwind that later.
Yeah, and the final story that we have today is surrounding stablecoins in general. There's more USDT in circulation than ever as Tether supply crosses 150 billion mark. Clever tweet here from Paolo Arduino, the CEO of Tether. 150 billion, next door 1 trillion. That's a big jump, but hey, I'm here for it. And of course, in the midst of the stablecoin madness, and maybe we should even talk about the fact that there's been a bit of thawing again on the stablecoin legislation, and maybe we will actually see that soon. But we have this guy, Mark Zuckerberg, back. Meta in talks to deploy stablecoin 3 years after giving up on landmark crypto project. We went from Libra to DM to nothing to now they're coming back with a wallet potentially and a stablecoin at Meta. Lots to talk about here on stablecoins.
100% inevitable. Like, it made sense why Zuckerberg wanted this the first time.
Yeah.
It just was, the US was absolutely not about that. It was a really bad time for him politically. He had radically underestimated how angry people were on him, both sides of the aisle, coming off of the previous election. So it was never going to happen, right? It was very clearly never going to happen in that old version. But to the extent that big tech companies are allowed to issue stable coins, they will all do it. They will all have their own internal currency. It's just going to make sense for them. You're going to have an on-ramp where you convert your USD into Instagram coin or Meta coin or, LinkedIn coin, which will be the lamest of them, of course. And it's just going to be like that. So, I mean, honestly, though, it is no guarantee that that is a thing that will be allowed to happen. In fact, some of the Republican holdouts to the stablecoin legislation, that is the exact thing that they do not want to happen. I think Josh Hawley, that's sort of one of his biggest concerns, is he does not want big tech to be able to accrue more power by virtue of having stablecoins. So no guarantee that it'll actually be regulatorily enabled, but to the extent that it is, you better believe Zuckerberg will be there first.
And do we believe that we're going to actually get this legislation now that it's been halted and the initial vote sort of failed?
I think yes. I actually think that the anti-crypto Democrats did themselves a real disservice. I think that they looked petulant and silly. I think that they frustrated their peers who were, who do have really big issues with the way that the legislation was written, but who actually still wanted to get it done. I think that sort of like obstructionism it's costly political theatrics. And so I think that we will get there with something. And I don't think that it's going to be much better for that walkout that was seen last week, but we'll see.
Totally agree. That was it. We cooked through it despite the technical issues and me having to play producer and set up a stream in less than 3 minutes. But I think we're amazing, to be honest.
There you go.
Amazing. But NLW, thank you so much. As always, guys, listen to the breakdown, follow him at NLW on X. And otherwise, we will see you all next Friday. Thanks, everyone. Thanks, man.
Later.